Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this quick revision of amendments for Inter-CA Jan 2025. The law for September 2024 and Jan 25 remains same, and only circulars have been added, which are basically clarifications by CBIC. Let's quickly go through the clarifications from which some questions may be asked by institute in your examination. Now, the first one is related to hybrid annuity model contracts. Now, when you talk about hybrid annuity model contracts, the concessionaires, basically those who are building roads. Now, those who are building roads, national highways, some payment of that particular transaction will be made by government, and it will be made in parts. Say suppose you achieve a milestone, then some payment will be made. Another milestone achieved, some payment will be made. The question was, what would be the time of supply in case of hybrid annuity model contracts? CBIC has clarified that these contracts will be regarded as continuous supply of service. And now try to recall. Continuous supply of service is when two conditions are satisfied. The contract is for more than 3 months and there is periodical payments. Are both the conditions getting satisfied? The answer is yes. As both the conditions are getting satisfied, it will be regarded as a continuous supply of service, and the time of supply will be date of invoice or date of receipt of payment or due date to issue invoice. Now, due date to issue invoice is of three types. First one, if payment date is ascertainable, then such payment date. If payment date is not ascertainable, then date of receipt of payment. If payment date is based on completion of an event, completion of a milestone, completion of an event, then completion of each event. Say suppose this gets completed on 5/6. The first milestone is achieved on 5/6, and thereafter you issue the invoice on 6/6 and you get the payment of 7/6, then the time of supply will be 5/6. But if you issue the invoice before this, then the time of supply will be date of invoice. This is the first clarification. Basically, time of supply for continuous supply of service has been incorporated for hybrid annuity model. Then the second one relates to place of supply in case of 10(1) CA, basically targeting online e-commerce industry. Now see what happens sometimes. There is a seller who is in Bihar. This supplier has received an order from Mr. B who is in Delhi, but the goods are getting delivered to Mr. C who is in Karnataka. Now the question was, what would be the place of supply in these transactions, especially when B is a unregistered person. Now if B is a unregistered person, then what would be the place of supply? Say suppose he was a registered person, then the place of supply will be principal place of business of the third person on whose direction the goods were received by the third person. That comes from 10(1)(b). 10(1)(b) clearly says the person to whom you have invoiced, that would be regarded as place of supply. But what will happen in case B is unregistered and there is no consideration being charged from Mr. C? See, if you carefully notice, the goods are getting delivered to C in Karnataka, and that's why government believes that the place of supply under 10(1) CA, when the supply is to a unregistered person, would be according to 10(1) CA, and 10(1) CA says if the address is available, if the recipient's address is available on the records of the supplier, then such address. If no address is available, then it will be location of the supplier. Now the question in this case was, address is available. Now two addresses are available. One is Delhi address, one is Karnataka address. Which one to use? CBIC has given a direction that the person who is billing, that is the supplier, should use the address of C because that is the address of the recipient. So wherever the delivery is happening, that will be regarded as the address, and the moment you say wherever delivery is happening, that will be regarded as address. Karnataka would be the place of supply, so that Karnataka gets half share of this IGST, though the billing is happening to a person in Delhi. Very important circular for your examination. Don't mix up 101B and 101CA. What the circular is trying to say is, when you check 101B versus 101CA, when the supply is to unregistered person, you will prefer 101CA, and as you are going to prefer 101CA, you will go by the address, and address which is mentioned in 101CA has to be the delivery address and not the billing address. Now, say suppose there is a registered person question, then please don't apply this, go by 101B. If it is to an unregistered person, then go by 101C. Note this distinction and keep. It's very important for your examination purposes because it will help you determine C plus S or I. Say suppose B was also in Bihar, then would you be able to charge C plus S? No, the place of supply will be Karnataka and you will end up charging IGST because as per 101CA, the address of delivery is the address of recipient. This is what you will have to apply for your examination. Very important circular from exam point of view. Okay, then the third one is with regard to 16.4 time limit for availing ITC. As you all very well remember, the time limit for availing ITC is 30th November after the financial year or date of filing, annual return, whichever is earlier. Now, the question is about RCM invoices. Let's take an example. Now, whenever it's a case of RCM and the supplier is unregistered person, then who raises the invoice? Recipient issues the invoice. For RCM cases, this is called as self-invoice. So if the supplier is unregistered and it is a case of RCM, then recipient has to issue the invoice and it is a self-invoice. Now the question which arises is, in this case, what would be the time limit for availing ITC? Say suppose there is a case of FY 22-23 where RCM service was received. Now RCM service is received in FY 22-23. I should have actually issued the invoice for RCM in FY 22-23 as a recipient, but I was not able to issue because I was not aware that RCM is applicable. There was a mistake at my end or it was missed out. In this case, say suppose I get to know in FY 24-25 that I have missed recording this RCM and paying that RCM. Now, can I issue the invoice in FY 24? Yes, I can issue the invoice here. Now, if I've issued the invoice in FY 24-25, what will be the time limit for availing ITC? Will it be based on FY 22-23? If it is based on FY 22-23, then it ends on 30th November 2023. If it is based on 24-25, then it is 30th November 2025. Now this was the confusion, and for this CBIC has clarified that the last date to avail ITC will depend on the invoice raised. That means it will be based on FY 24-25. It also means that even if I do this late, I will still be able to avail ITC. It's a very welcome circular, but obviously it has some conditions saying that you will have to pay interest from here to here, not from the time you had to pay the tax till the time you have actually paid the tax. For example, say suppose I received the service on 7/12/2022. Now when I received the service on 7/12 and say suppose I make the payment on the same day, then the due date for paying this tax to government was 20th Jan 2023. Now from the due date of paying tax till the date of payment of tax, interest will have to be applied. See, I'll get ITC, but interest will be applicable and you will not get ITC of interest that you are anyways aware of. So just be careful of this point. Interest will apply, penal provisions can also apply. The only advantage and the biggest advantage is ITC will not go waste. Otherwise, the time limit would have already been over. I wouldn't have got ITC. So to sum up, RCM, say suppose there is a delay in raising the invoice, then in that case, whenever the invoice is issued, based on that invoice, I can avail ITC for RCM cases. Very important circular. This will come as part of a output ITC question where they will give you this data that invoice is now issued. Now when they say invoice is now issued in December 2024, will it come in your calculation? Yes, it will come in your calculation in two parts. One, it will come in ITC. Second, it will come at the end as tax payable under RCM. Sir, should we calculate interest for such cases? If the question asks for it, then calculate interest, otherwise don't calculate interest. And interest is very simple. From the due date of paying tax till the date of paying such tax. There would have been a due date till the date of paying tax. And as you know, RCM is always required to be paid through e-cash ledger. So on the entire amount, interest will be applicable. Okay. Then the next circular is about ducts and manholes, which is used for optical fiber cable network, basically Geo. Now Geo runs on optical fiber cable network. Even Airtel has started working on optical fiber cable network. Now when you talk about this optical fiber and cable network, now ducts and manholes, in that ducts and manholes they will lay the fiber cables, and then that duct or manhole was destroyed to lay it, and then a new duct or manhole will be created and placed. Now this duct or manhole which is being placed, the question is whether ITC will be available for this duct and manhole. Let me tell you the provision. Section 17(5) says any goods or service or works contract used for immovable property construction is not eligible for ITC. But if the same is for plant and machinery, then ITC is available. And plant and machinery excludes three things: land and building, pipeline outside the factory, and lastly telecommunication towers. Now if you see, there are only three exclusion. One is land and building, pipeline outside the factory, and telecommunication towers. Only these three you will not get ITC. Is duct or manhole covered in this exclusion? The answer is no, and hence CBIC has said it is as good as plant and machinery. You will be eligible for ITC. They might ask you this in a bigger question or in a MCQ, saying that a company is purchasing ducts and manholes. Will that company be eligible for ITC? And you will have to take a stand that yes, the company will be eligible for ITC, because give the reason: it qualifies to be plant and machinery and it is not excluded, covered by CBIC circular as well. Okay, then the next one is regarding warranty replacement of parts and repair service during warranty period. Now let's take some examples on this. Say suppose Honda is providing warranty service to customer for two-wheelers. Honda is providing warranty service for two-wheelers. Now when Honda is providing warranty service, see, the price of that warranty is already included. Now say suppose something goes wrong, then Honda will do a free part replacement. The question is, when they do a free part replacement, whether GST will apply on this. See, they have already charged for warranty which was inbuilt in the price of the vehicle. The warranty charges were inbuilt in the price of the vehicle. Now, as the warranty charges is inbuilt in the price of the vehicle, the question which arises is whether GST will apply on this free part which is being supplied to customer. Because Schedule 1 says permanent transfer of a business asset where ITC was taken is liable to GST even without consideration. So the question was whether this free part will be liable, because Honda would have taken ITC on this part. They would have taken ITC on this part. Now they are giving free of cost to the customer. The question is whether GST will apply. CBIC has clarified no GST if no consideration charged. No GST if no consideration charged. Say suppose I charge some consideration, sir. Say suppose you charge some nominal amount. Then on that nominal amount you will have to pay GST. But if you do it free replacement, then no GST will be applicable. But sir, should I reverse ITC? The law has said no need to reverse ITC. No need to reverse ITC. But why is this, sir? The reason is very simple. You have already charged for warranty. Warranty price was already inbuilt in the price of the vehicle. You have already paid GST on price of the vehicle. As you have already paid GST on the price of the vehicle, you have actually also paid GST on this free part technically. And hence, no GST here. No need to reverse ITC here. That is the first part. This is case 1. Original equipment manufacturer is Honda, which is providing warranty to the customer, and OEM, original equipment manufacturer, Honda being the OEM for Activas or two-wheelers. Now, they are providing this to customers. No GST here. No need to reverse ITC here. Good, very good circular. Now, let's change it a bit. Case 2 talks about a distributor providing this service on behalf of Honda. Now see, what will happen is Honda has its dealers. Now in other cases, see, engine etc. Honda replaces, but in other cases some small other things, distributor will provide the service to customer. Now as it is covered by warranty, what will be done? The moment we say it is covered by warranty, customer will get it free of cost. So when dealer is providing this free of cost, no GST. If any additional consideration is charged, GST will apply only on the additional consideration. That's anyways clear. Then what will dealer do? Dealer will get that money from the manufacturer. Dealer will invoice Honda. Dealer will invoice Honda. Now when dealer is invoicing Honda for free of cost part which was given to the customer, then whether dealer has to charge GST to Honda? The answer is yes, GST applicable here. And Honda will get ITC. So net impact is again 0. If you see, Honda will get ITC for this. So the net impact of this transaction is 0. Why is the net impact 0? Because dealer has paid output tax and Honda has got ITC. The net impact of the transaction is 0. So this is part 1, where dealer invoices to Honda for this particular free of cost part which was supplied. Second case, Honda will replace the part. What is this replacement cent, sir? Now replacement cent meaning whatever part dealer has given to customer, Honda will give it to dealer. Now when Honda is giving to dealer, will GST apply on this replacement which is sent by Honda? CBIC has clarified no GST on this. Whether Honda will lose ITC on the part? No need to reverse ITC. So the net impact of this transaction is again 0. Now if you see carefully, in both the cases, the net impact of the transaction is 0. In the first case, though we have invoiced, but dealer paid output, Honda got ITC of that. In the second case, Honda is giving a replacement part. Honda will not charge GST. Dealer will not get ITC. Honda is not required to reverse ITC on the part. That anyways he is not required to do even in the first case. So when dealer is providing two cases till now. One, dealer will invoice, or second, Honda provides a replacement. There is a third possibility. Honda will issue a credit note. The third possibility is Honda to issue credit note to dealer for that amount. Say suppose the amount is 10,000, Honda will issue a credit note for 10,000. Now when credit note is issued, so that it can be adjusted against another invoice, then in that case credit note can be with GST or without GST. Again the impact will be 0, because if credit note is issued with GST, then what will happen? Honda will reduce their output, because Honda is issuing credit note. Honda will reduce its output. Dealer will have to reduce his ITC. Net impact of the transaction is again 0. Second, if the credit note is without GST, then in that case Honda is not required to do anything. Dealer is also not required to do anything. Only that money comes to the dealer. That means the net impact of the transaction, whether credit note is with GST or without GST called as financial credit note or commercial credit note, the net impact of the transaction will be 0. So government has provided 3 alternatives, and in all the 3, the end result is same. Let's recall quickly. Dealer is providing something to the customer free of cost because it was covered under warranty. On that warranty already GST is discharged initially because the price of the vehicle already included warranty cost. Now option 1, whether dealer is invoicing to Honda, then in that case GST is applicable and Honda will get ITC. Second, replacement sent, no impact of GST. Third, issuing of credit note, no impact of GST. This is the second case. Second case is where distributor provides the replacement of parts and or repair service to the customer. This is the second case. Now coming to the third one. Third one is repair service provided by distributor. So dealer, this is very common. You have heard of free service? Very well, sir. Now free service, what happens in free service? Dealer provides free service to the customer. Now if any additional consideration is charged, that will be liable, because he charges for some oil etc., that will be liable. But other than that, labor charges which is free of cost, that free service, there is no GST applicable here. But do you know, dealer will actually invoice it to Honda. Now the question is, when dealer is actually invoicing for the free service which is provided, who is the recipient? CBIC has clarified Honda is the recipient, because the definition of recipient says the person who is liable to pay consideration is the recipient. Now as Honda is the recipient of this, here GST will be charged and Honda will get ITC. This is the third part, very simple part of free service. Then coming to the fourth one, which was extended warranty, which has further been clarified. Now extended warranty, what happens? Say suppose extended warranty is being provided. Now extended warranty, if it is provided along with vehicle at that point of time, plus by the supplier, whoever is supplying this vehicle, he is only providing extended warranty, then the rate of tax on extended warranty will be vehicle rate, because we are applying the principle of composite supply. Vehicle is the principal supply and extended warranty is incidental or ancillary. Now this has come from the other circular which has been issued after this on the same topic. Earlier CBIC had only said if extended warranty is provided along with the vehicle, then rate of tax of the vehicle will be applicable because of principal supply. Now they have added that by the supplier, extended warranty by the supplier at that point of time, then the rate of tax will be this. That means any other case like extended warranty after supply of vehicle, or extended warranty by other than supplier, then it will be regarded as a supply of service, and as it will be regarded as supply of service, it will have a completely different treatment, not the rate of tax applicable on vehicle. So careful, vehicle GST rate will apply only when two conditions are satisfied. Extended warranty is being provided along with the vehicle at that point of time, plus it is being provided by the supplier of vehicle. Then in that case, the rate of tax on extended warranty will be vehicle rate, because the principal supply is vehicle. This is what has been clarified. Now after this they brought one more circular on this, but in that case they have just said, see here, this one they had given a circular for part. Now they have said not just part of the vehicle but any goods in relation to this extended warranty or warranty will be covered. So part will also include goods. That's what they have clarified in the second circular, and then they have added this particular statement saying that by the supplier of vehicle, only then the rate of tax of the vehicle will apply. If it is separately supplied by some other person, then in that case it is a separate supply. So this was a quick revision of all the circulars which are applicable for Jan 25. Additionally, wishing you all the best. Do well in your exams.